Hey guys, Boris. Welcome to the technical preview of majors for Euro dollar, dollar yen, pound dollar for Sep 26th to Sep 30th. Very interesting week coming up in a sense that it's really going to be very much a setup week for I think, a very huge breakout week the week after. Because ultimately, although we've had the FOMC, we had the BOJ, we had the RBNZ last week, interestingly enough, the situation is sort of unsettled at this point and very much contingent on true U.S. data. And if there was anything that was a big takeaway from Janet Yellen's testimony or Janet Yellen's press conference on Wednesday, was that employment is the only thing that really matters. As long as job growth continues at about 150,000 pace or more for the next 2 or 3 months, the rate hike in December is virtually assured. So the critical thing, the only thing that can really scuttle the rate hike and really drive the dollar down hardcore would be a significant weakening in the labor situation. If the labor situation remains okay, I think all other economic factors are not going to weigh on the Fed decision because the Fed really wants to normalize rates. So the dollar remains in this very awkward sort of a no man's land situation. And it's pretty much going to likely, I think, remain in this narrow range at least for the next week or so, because we don't have any significant data next week. Next week is sort of one of the most barren economic weeks I think I can remember in a long, long time, which, interestingly enough, I think is going to present some interesting opportunities, not on the major side, but on the crosses side. In the meantime, let's take a look at the key levels, I think, that are going to be coming into play next week, with euro dollar showing resistance at around the 1350 level. Support still stays at this 1150 level. This 1150 is actually very, very important. We'll take a look at the charts as to why I think it becomes sort of a make or break level for the euro. The euro is still in this kind of a no man's zone trade, but in the near term really looks to have a modest positive bias. In other words, they're still selling the dollar. They're still very skeptical about the ultimate move toward an increase in dollar rates, which is the only thing that really moves the dollar higher now at this point. Dollar yen survived the run towards the 100, but it may not be the last run yet. I still think that we may have another run for it next week. So do not be complacent in your belief that dollar yen could not break the 100 level. We managed to survive so far, but only if the move is above 103 do I think you have room to kind of breathe a sigh of relief as far as dollar yen going to the upside for the bulls. And the last story, of course, the most interesting in some ways, is the continued weakness of cable. This was the week when Brexit fears returned with a vengeance, and cable is by far the weakest of the majors and is very likely to remain that way for quite a while because the situation is not getting any better, it's only getting worse. Perhaps there'll be a little bit of short covering in cable, but the fundamental drive against UK right now is very strong because the Europeans are utterly unwilling to do any kind of a compromise, and the Brits seem to be headed straight off a cliff towards a trigger of the Article 50 and therefore trigger of the Brexit proposition. So cable remains in many ways a long-term secular sell, and until we see any kind of a positive change on the Brexit front, I think it's going to be very much a sell the rally trade for quite a long time, and perhaps one of the easiest trades to trade for the near term. Let's take a look at the charts here and just see how everything sets up. So this is the small upside bias that you kind of see in the euro. You have a series of higher lows. The 1150 held for all of September, really haven't been able to break it. But at the same time, looking at it from the other end, you also have a series of lower highs. You have a classic volatility wedge where, and the general, the rule of thumb always when you have these kind of volatility wedges is the break determines direction. So if we have a big breakout here through to the 1350 level, and it can kind of start to poke above that level, that really would suggest a preponderance of probability towards a much higher move towards the 1500 level. A break below the 1150, of course, really points us towards the 109.50. So I think next week we may have a few false positives one way or the other, up and down, but the near-term direction here is really going to become much more, I think, clear, depending on which side of this triangle the euro decides to break. Not much on the data set. IFO is the only thing that's on the European side. US just has nothing. Everything is really second-tier data of very little import. Dollar yen, like I said, survived the run towards the 100. And the 100, frankly, I mean, or sort of 99, really, honestly, you have to look at it as sort of the Brexit lows is the true support here. 100 is sort of a psychological support, but it's really the Brexit lows, 99s, that are the true support here. Seem to be holding, but holding with less and less power every time. Now we peaked above the 101s, but really couldn't get much muster about it higher. Again, there's not much U.S. data. It's really going to be driven essentially by sentiment, U.S. rates, maybe some commentary out of Japan. The Japanese are also not doing anything, I think, next week of any import. It's really it's going to be interesting to see because from a fundamental point of view, it really sets up itself to be a very low volatility week. But generally, sometimes when you have these low volatility non-eventful weeks, you could have trade flows and order flows that really move this thing around. So I wouldn't be too complacent about it staying in a range. But for now, of course, it's very clear. The 100 is the near-term test. And the upside really sort of the truly bullish case doesn't come into play until 103 gets broken to the upside. And that's the thing to watch. I think it's quite a long way for it to go to 103 next week. But nothing is impossible. We start picking towards the 102s. It really puts it a much more firmer bullish trade. And it would suggest that this 100 was definitely the solid test of the bottom as we go. If we start to drift back towards 100, the second run, now we stopped right in front of it. We stopped at about 110, 100.10 on the test here. I think the next run down could actually break it. And then it becomes quite interesting because then it's really a battle of whether the 99 holds, which is the post-Brexit low. And of course, cable, that's really the most interesting trade in terms of directionality. Because look at this, you couldn't find a cleaner, meaner, deeper decline than you have in cable. Just a complete failure, series of lower highs. The only thing that gives you pause here is that we're now at these post-Brexit lows. This 28.50, the 27.78 was sort of this. I remember that Asian session low that was just probably a lot of huge amount of very thin optionality trading. It was probably running option barriers in Asian trade that resulted in that. But ultimately, really, it's sort of this whole 28 barrier that is really, really critical. So are we going to likely test this? Possibly we could test this week. Certainly the pressure on cable is to the downside very much. So again, not much UK data to really make us move one way or the other. It's really going to be all based upon commentary. Boris Johnson shut off his mouth last week, and that really created further furor because clearly the government of Theresa May was not happy with any pronouncement that they were really willing and ready to pull the trigger on Article 50. But overall, the market, this is what you're seeing here in the market, is more and more sentiment coalescing about the idea that this isn't inevitable. If Brexit is inevitable, then so is the decline in cable. And that's why any kind of a rally here presents an opportunity to sell, simply because I don't see anything on the horizon that's going to change that scenario for the near term. So very much worth watching. 2800 is the support, but any kind of a bounce above the 30 probably still represents a very decent short. Only a break above 32, which would, be a function of some short covering and maybe a change in sentiment that there is something a brew that is a diplomatic solution. You really, the only thing that saves cable is some kind of a diplomatic solution. Perhaps the market, will sense that, or perhaps something is behind the scenes that's going on that could confirm that. But until and unless we see that in price action, I still think it's very much a very clean, easy way to the short side here on any kind of a rally. So that's how the week shapes up for euro, for yen, and for cable.